How are you?
Good, good. How are you?
I'm doing good.
Great. Let's just give a couple of minutes to
Sure,
more students join in. Yeah.
no problem.
Yeah. Thanks.
So we'll start the session and the other students can join in in just some time. I'll just start with the initiation and then I'll hand it over to Mahesh sir. So good evening everyone. We are here at the third session of Uday Fintech University and the session is on account aggregation and we have Mr. Mahesh here with us who is the co-founder of Sahamati. So Sahamati is a collective of account aggregator ecosystem, and Mr. Mahesh is one of the co-founders of this ecosystem, and he's completed his master's from University of Alabama, and he has an industry exposure of over 30 years. And prior to Sahamati, he's also co-founded IndiaInfo.com and OneIndia.com. So very warm welcome to you, and I would hand it over to you, sir, to just carry on the presentation from here.
Okay, thank you, Sandra. Let me first present my screen
Sure.
and we'll start from there. And let me know if it appears. And
Yeah. Yeah, we can see your screen now.
great. Thank you, everybody. I know it's a pleasure to be speaking with the students, and I think this competition will be very, very interesting. So I will quickly go over the introduction of AA and from few of the queries which I have received it and I get a feeling that you people are already familiar with it. So stop me in between, like if you want to ask me anything, I will explain what AA is and what the use cases are and what's and what Sahamati is. As you all know, many, many years ago, India was a data poor country, and you would agree that today we are a data rich company. As the mobile internet penetration grew in India, and the number of the bank accounts which have increased from the 2014, and you have social media, so everybody seems to have a digital footprint. Now the question is, how can we use this data to actually help the data owners to become economically richer? So they may be data rich, okay, but what has been happening is somebody else has been benefiting from your data. The corporations use your data to understand who you are, and they sell the appropriate your product to you, which is not wrong, but now we want to see, we want to invert this pyramid and see how the owner of the data will have complete control on with whom it is shared, for what it is shared, how much it is shared, and they actually benefit from it. And these are the few things you all would have heard of. You have different kinds of data, and the account aggregator specifically focuses on the personal data. And sometime this year, we hope the parliament will be passing and making this a PDP bill, the a personal data protection bill as the law. After that becomes the law, you will see the number of institutions which will use the AA framework, it will grow, by an extreme. Now we have about 10 banks, and once it will become the law, we feel that, like every year at least, and 100 to 200 institutions will be, on this framework. Even in this year, if you see that, the way people have been sharing their data, it has been, but the old way. Either they send by email, but it is on a stick, or you even share your account details, for somebody to do the screen scraping. Or if you are applying for a loan, you need to go to all the banks, actually get the statement, have it endorsed, and okay, then go to the bank, where you're applying for the loan. Obviously, it is not a scalable way of doing things. And anybody receiving all this information by email, the hard copy, you would agree that the one who's going to receive it, it is not required that they have to trust this data, okay, because you could have always manipulated it, and the information you are sharing is old, it is stale. So all of this is actually solved in our account aggregator or framework. I'll explain a typical flow, and I think after that you'll have a very good understanding. And this entire data economy in the world is huge. It is at least 3 trillion. Even this information what I'm giving is few years old, and I would think it will be now a lot more. Okay, now the main thing we want to see is how can the owner of the data have complete control on their information and on how it is used, and they will know who is accessing your data. This is the crux of this entire presentation. So like as I explained, at the end of it, if you have anything to ask, feel free to ask, because it is a very, very important slide. So the account aggregator now is a new licensed entity introduced by the RBI. The account aggregators have what we call an NBFC AA license. Okay, then the only ones who can participate in this ecosystem, the FIPs, where your information is there, your data is there, like your bank, your mutual fund, insurance, your GST, etc. And FIUs are the institutions which want to access your data. Now, only FIPs and FIUs which are registered and regulated by any one of the 4 financial regulators, which is RBI, SEBI, IRDAI, and PFRDA. Only if you are any one of those, you are now allowed to be in this ecosystem as FIP and FIU. In the last October, GST has been approved to be an FIP, even though they are not under any of these 4 regulators. RBI and the Department of Revenue agreed, and it was approved that GST can be an FIP also. So going forward also, we expect many more such new sectors will be part of this AA framework. I will quickly explain a flow. How about we assume that the user has already an account with an account aggregator, by which he'll have an account aggregator handle, just exactly like the way you have a UPI handle. I think you all are extremely conversant in using the all these UPI apps. So the account aggregator app also will work on the same line. So when you go to an FIU asking for a service, how about you think it's a home loan, right? And you will see in this offline form or in the online form, they will have introduced a new field called account aggregator handle. So you will enter something like Mahesh at AA1. And you will say you want to apply for a loan, the amount, etc. Now Now the bank where you are applying, how about we assume it is State Bank of India, you have gone. Now we'll send a request to AA1 that whom it will send the information to AA1. It will send what we call a consent request, stating Mahesh has applied for a loan. We want his 6 months of the bank statement. Now you note this FIU, which in this case is SBI, has no clue with which of the banks I have an account. Now, in UPI apps, when you open an account, you do the discovery and the linking of your bank accounts. In the same way, even here, when I had opened an account with an account aggregator, I would have done the necessary linking with the bank accounts, insurance accounts, and all of that. Now, State Bank of India will send a request to AA1 that they want my 6 months of information. The account aggregator will send me a notification on their mobile app. I will open it, and how about you assume I had selected 4 of my bank accounts were linked. I may choose only 2 bank accounts for which I want to share my statement. I will choose those 2 bank accounts, and I will give my consent. Then the account aggregator will send a separate consent artifact to each of my bank accounts, stating that they want my 6 months of the bank statement. So how about you think I had an account with Axis Bank and HDFC? So these 2 banks will extract my bank statement. It will encrypt with the public encryption key of State Bank of India and have it sent to the account aggregator. Then the account aggregator will inform the FIU, which in this case is SBI, that information is here. The SBI will pick up all that information from the account aggregator. After that, account aggregator will be deleting all that information. So the account aggregator, number 1, is not able to make any sense of any information flowing through it, because it is all encrypted data. Hence, we say account aggregator is a data blind, and it won't save, store, sell any of the data which will flow through it. The account aggregator's business model is to charge the FIU, or the end consumer for the service it actually provides. So any questions here? Okay, if not, we can move to the next screen.
Yeah, so I guess we can move to the next one.
Yeah. So I've spoken about already that it is actually data blind, so it is not able to do anything. You have 4 account aggregators which have an operating license, which means it can launch its services anytime. 3 of them are also have what we call an in-principle license and are waiting, for their operating licenses. For anybody who's interested in they're trying out any applications in this account aggregator ecosystem, 4 sandboxes are there, so you can build any of the applications on around these account aggregators. Okay, this is not important for you. And all these institutions, of which about 4 to 5 are have been certified by Sahamati and are production ready. So you will find few of these banks going live with their applications in the coming, I would say by end of Feb or in the first half of March. Like SBI, HDFC, Axis, ICICI will be going live. And if you take these 4 banks itself, it constitutes a very big chunk of the banking system in India. And still, this is a very small start, but a very important and significant start. You have about 185 banks in India. You have 10,000 NBFCs. Then you have insurance companies, wealth managers. They all have to actually come on board. So your consent, what we say, it follows the organs framework. It has open standards, so it means it has got open architecture. It is revocable, so at any point of time, a user can revoke a consent. It is granular, so you can ask for specific data from your FIP. Say, for example, it's a bank. You can ask for the entire bank statement of a month, or all the transactions of a day, or you want only the credits between me and somebody else. So you can go as granular as you want. You can ask for the a balance information as of February 1st, like that. You can go as deep as you want. It is auditable, so the account aggregator will have all the logs of all the transactions, because when an FIU will ask for the data and which FIPs shared the data, the logs will always be there, which you are able to see in your account aggregator app. Or notice every time an account aggregator will be you're pulling information from your FIPs. Every time the account aggregator will keep you informed that somebody is sharing your information, so you can open and see that if you want to continue with that old consent or you want to stop it. Security, as I said, that it is end-to-end encrypted, so it is safe. So the important things in this A framework, which I told you, is the artifact in which all that information is there. That what information you want. Example, the bank statement for what range, and what is the purpose. The law says the FIU must declare why are you asking for the data. Is it for loan? Is it for loan monitoring? Is it for wealth management? All that it has to be informed, by which the user can figure out why they're asking for. And the APIs all have been standardized. So the way the FIUs speak with an account aggregator, it's all standardized. Whether HDFC will speak to AA1 or AA2, or Axis Bank will speak to AA1 or AA2, APIs will be the same. And the last point is what we call the schema. The structure of the bank statement has been standardized. So when an FIU will receive the bank statement from HDFC, SBI, or Axis Bank, the structure of this information is already standardized. So FIU knows how this information will look like. This is the typical consent artifact. What you're seeing, because it is saying FIU is saying I want the information only once. Okay, I want the profile information, the summary information, and the transactions. Okay, and it is saying about the range. So it is asking for 6 months of my bank statement. The purpose code is the loan application, and the frequency is only once it will be able to actually pull. This, what you see, the data life, which says 15 days, is important. So the FIU is allowed to process your data only for 15 days. After the 15th day, if it wants to access the information again, it needs to again take the consent from the user. And if you violate this part, according to the new law which is yet to get approved, you will be penalized heavily. And here we have something called the recurring consent. So I'm saying it is a periodic consent. Okay, and every day I want to be pulling, and I can use the information for 5 years. Okay, so for 5 years Every day, I'll be able to extract your information. So you have the three pillars. Yeah, technology, as I explained, you have the consent artifact, you have APIs, you have schemas, then you have the institutions, the new institutions, which are the new account aggregators, which are the NBFC licensees, and then you have Sahamati, which is a trade body for this account aggregator ecosystem. Then the law, as I said, which we hope it will become, the bill will become the law soon. It is called the PDP bill, and the RBI Act, which is called the AA Master Directive, okay, which explains the laws of what an FIP has to do, what an account aggregator has to do, FIU has to do, who can participate. All these links you can find on Sahamati's resources page. Okay, and here this part I explained. I will go explain some of the use cases. Now, if you see the lending use case, the reason we say it improves the loan book of the lender. Okay, why is that? Because you are now having more information of the users from their accounts, easily accessible, and this information indeed came from the FIP. As I said, if I had applied for a loan with SBI, HDFC was the bank which sent my statement. HDFC will add a digital signature with my onto the bank's statement when it will send to SBI. So SBI knows this statement came from HDFC. All the data is machine readable. So immediately the back end of SBI will be able to process the data. But as of to now, we give the hard copy, and what they do is they screen scrape all the information, and then it is okay. So after a week or so, you will know whether you're going to get a loan. Now here it so happens that the money they have to spend on the fraud detection also won't be all that high, because they know from whom it is coming. It is verified data, so the lenders will not have to spend in that. So in the real time, a lender will be able to figure out whether to give the loan or not. As of now, when you apply for a loan, it may take 15 days, 1 month, etc. Or so it will improve the quality. Now, how it will improve the quantity? Now, many people in India, they want to apply for a small loan. We should not think about the folks who are here on the call. If you need to think about, say, example, Bharat, the rickshaw driver, and all of them, right? The amount of loan they want is actually small, maybe 4,000, 5,000, 2,000. Okay, even though the large banks will be able to afford to give them loans, but the amount of the paperwork involved is very high, and it won't work out. Okay, right? So, and in the next slide, I'll explain on how it can change. Also, in India, a mere 8% of MSMEs are having access to formal credit, which means only 8% of them are able to go to the banks. Everybody else, either they don't apply for loan, or if they apply for loan, they actually go to the private lenders and get a loan at a very, very high cost. Now, if you take this example of this MSME owner, he has a digital footprint, because he is filing his GST. He's having a like at least one of the bank accounts. He has a mobile phone, so he has the digital footprint. But if he wants to take a loan, he is not able to give a collateral, as everybody gives. His main thing he has, the main the gold or asset he has in that MSME is what? The cash flow, because he is buying from a wholesaler. He's in his factory, and he's selling the like actual product. So if a bank is able to look at the GST statement and the bank statement, they will be able to figure out the cash flow. With account aggregator, this entire thing can be automated. So the lender is able to see all this information, and within 120 seconds, the bank can figure out, whether he should get a loan or not, irrespective of the size. And we have already built some pilot apps where an MSME owner sitting in a factory is able to apply for a loan. If the loan gets approved on the phone, he is able to sign, and the bank is able to send them, the money over UPI to him, and he's also able to repay that money digitally at the end of the tenure, the loan tenure. See, everything is automated, everything is actually done digitally. There's no requirement for him to go to the thing at all bank. Now, of course, you have the PFM apps, which are extremely important. In India, it is yet to take off. Very few people understand, are having a 360-degree view of their own finances. And with the PFM app, that app is able to see your bank statement, your loans, your assets, your insurance, the policies, your provident fund, everything. Okay, so so even though India has PFM apps, either that or even the robo advisory, the wealth management, the issue they have is accessing your information, because either you have to send by email all your information, somebody has to extract it, enter it, or onto that app. I mean, onto their thing. All that is gone with account aggregator, because all these applications will get digital data directly, from your bank or insurance, and these people are able to make use of it. So, we are a collective of this account aggregator ecosystem, which means we work with AAs, FIPs, FIUs, and the technology service providers, privacy experts, lawyers, everybody who is directly and indirectly associated with this ecosystem. We work with the ecosystem to design standards, the certifications. I mean, we have almost come up with the code of conduct about who does what in this ecosystem. So these are the things which we actually do. So if you have any questions, I'm happy to respond.
Yeah, we have one from Kiran. Kiran, please go ahead.
Yeah, Kiran.
Yeah, you can unmute yourself and ask the question. Or if he does not have it, then I think Puneet has also raised his hand. Puneet, you can go ahead.
Sure. Thanks. Hello, sir.
Hi.
Thank you very much for a very valuable presentation. I had a question regarding, management of loans. You had written in one of the slides, said that, there's with the account aggregation, the management of loans and the loan monitoring will be much better. I just wanted to understand more on that particular aspect.
Sure. Yeah.
If you could.
So now as we we can go forward, the way things are going to happen is when your loan gets approved, okay, the lender will say that you will have to give me a consent to monitor your bank account, because the lender wants to keep an eye on your financial health. Okay, so because you take a loan, okay, and you had income, okay, but if you start blowing the money, on holidays, this, that, and all that, so then the lender will know that the cash flow is changing. Okay, so or if it is an MSME, the amount of sales has actually come down, because they will know about their sales from the GST invoices. Or if the sales look good and the collections are bad, which they will know from the bank statement, then the lender will get the early warning signals that something is going south. The lender will have to get engaged with the borrower and say that, hey, something is wrong. Okay, you think you want to increase the your tenure of the loan, or if it is going bad, instead of, it is good for the lender to get involved with the borrower, by which there is no NPA, because the NPAs are an issue. So the way that that example I gave, it is called a recurring consent. So if I had a home loan for 15 years, so I will allow the bank, to see my bank statement, whether it could be the, all the transactions, or it could be only the balances. It can be anything, for the entire 15 years.
So is this a policy that is going to get come something like this? Because say, from what I understand today, any bank's trigger point for monitoring of bad loan or anything is the non-payment of a particular EMI. So
Correct.
that is trigger point number one, where the first payment or a non-payment of an EMI triggers a bank into saying that why is it that I have not received the payment, and they start making soft calls to the customer. But a
Correct.
changing expenditure pattern would trigger a call from the bank to the customer saying, why are you going out for a holiday?
No, no, no. They can't say that. I mean, see, it is not a human being, but they're automated, like actually back-end system. See, I mean, it is up to the the lender about what information they want. I mean, maybe they want
Right.
only the balances,
Right.
right? So, see, but instead of the bank waiting for the first your default payment, isn't it better they they know in advance that it is about to happen?
Early warning signals, maybe.
Yeah, see, as much as the borrower has to be protected, so should the lender also, right?
Of course, of course. Sure, sir. Sure. Thank you so much.
Okay, any questions? Next.
So till the time we have students' questions, I guess I can just pick it from the question bank that we had received from the students only. So the
Okay.
first one being, so India being a cash-heavy economy, so obviously there's been some change towards digital payments, but still a lot of transactions, a lot of segments in the society still rely on cash.
Yes.
So, since talking about AA, it is helping the underserved segments to get access to cash flow based loan products also. But how will this work considering that there's still a heavy prevalence of cash transactions and very little digital footprint, so to say, of such borrowers?
Yeah. So digital, I'd say that account will be there. See, not literally everybody has the bank account, but if somebody wants access to the formal credit, I think that slow switch needs to happen. Even if in the shop, see, many shopkeepers, if you see, their everyday thing, right? The collection, they go and get deposited in the bank. They actually do that. Okay, yeah, but I'm not saying everybody is doing that, but it is actually happening. So when the folks who are handling only cash and they feel there is a need for them to avail such services, and their friends and family are they're benefiting from the AA framework or this, because because they are making use of the bank account, to either withdraw money, deposit the money, and all that. I would say you will see the change in behavior.
Okay, but
But it is
digital
a long
footprint,
journey. I mean, it is a
right?
journey. Okay, it's not going to happen overnight. Okay, so now
Mhm.
what we all are doing now here is, it is the start of the journey.
Right, right. Fair point. But digital footprint still remains a key point. We cannot have it without any digital footprint.
Yeah, surely, agreed.
Fair enough. Fair enough. So the next one is on the operational and regulatory perspective of AA ecosystem. One, are all the bank entities mandated to join the AA ecosystem? And a follow up on that only. So is an account aggregator platform. Uh, so yeah, just maybe we can start with the first
Currently, it
question.
isn't mandated. Okay, but
Hmm,
we do expect. I mean, afterwards it will be mandated, And as I said to everybody, in a way, it was good that it wasn't, like actually compulsory for all banks, because we are in the wave one. Okay, so we had to ensure, yeah, many everything what we are doing was actually working fine in all of that. So now we have reached in that stage. And in my opinion, any of the banks which is your forward thinking, okay,
Mm-hmm.
will actually join the framework. Now everybody who's on this call, I'm sure with whoever they have the bank account, you know for sure from their bank, they do have the services like internet banking, mobile banking, and the UPI. If you have already had an account with a bank which is not having these things, you would close that account and shift to a bank which has all these features. So you will see that happening over the years. If a bank is not on an account aggregator framework, the people will be going to shift away from that bank. But I think we don't have to wait for that day. Even well before that, all the financial institutions will make use of the account aggregator framework.
Okay. Yeah. Fair enough. So, yeah, just to follow up on that only. So, which are the entities which currently participate in the AA ecosystem as a information provider as well as an information user?
Yeah, I showed the logos, okay, and it is also on the website. I'll share that link here.
Yeah.
One second. Yeah, now I'm about to share. You will see the ones who are actually participating as FIPs and FIUs in AA. To in wave one, as I said, it will be HDFC, SBI, Axis, IndusInd, ICICI, IDFC First, the Bajaj Finserv, lending card.
Mhm.
All of these are actually part of wave one.
Okay. Okay. So, currently it's majorly FS players is what I understand from the presentation that you had shared. Is Sahamati also planning to include non-FS players into the entire ecosystem of account aggregation?
You give an example like who?
So, say players like maybe Zomato or Swiggy, they'll also
No.
have, yeah.
No, no, they can't. Like if you see the FAQ, because as the RBI has said, and even I have informed in the presentation, only if you are registered and regulated by any one of the four
Mm-hmm.
regulators, RBI, SEBI, IRDAI, which is the insurance regulator, and PFRDA, which is the a pension fund regulator. You
Mm-hmm.
have to be registered and regulated by any one of those. Only they can actually participate in the A ecosystem as of now. Okay,
Okay.
afterwards, we do expect it will be opened up, but that is up to the regulator.
Okay. Okay. Fair enough. So the next one is regarding the risk that is around using or being a financial account aggregator. So what is the risk in when a user is using a financial account aggregator platform?
See, the risk I would say is exactly the same as how the risk which you have when you use a UPI app. I mean, if you share your phone with your friends and family and you have shared the password, okay, then somebody will be able to share your information. So I do not think AA is introducing any new threats.
Mm-hmm.
Okay, it's like in any other their digital like actually product. If you
Mm-hmm.
have taken the precautions on the end user side,
Mm-hmm.
everything is good.
Okay.
And
Okay.
as I told, AA will not be going to store any information. So
Mm-hmm.
there is no question of the data leaks happening from the account aggregator.
Mm-hmm. Okay. So the next one is regarding so a lot of alternate data is right now being used by lending companies. So the next one is regarding that. So there have been instances where individual data has been used to a much higher extent than what is required. They're using their social media profiles or calling their contacts. So how does AA put user in control by just formalizing this entire ecosystem, and how does it prevent such kind of mishaps from happening?
See, the onus actually is more on the FIU because the AA acts more as a consent manager. You give the consent and it will be sending the
Mm-hmm.
information to the FIU. The onus, the data governance is a lot on the FIU. Okay,
Mm-hmm.
and as I said, once this PDP bill will become the law, if the FIU violates it, okay, they'll
Right.
be in a lot of trouble to the extent of they can even lose the license. And the financial, I mean, the financial thing, right? The literacy as a whole in India is actually required. I think you were speaking about all those, the lending apps fiasco, which happened like about a month or two ago,
Yeah, yeah.
right? So if people knew what they were doing, and unfortunately I would say that the folks who are educated the most are the ones who fall into these scams more than others. Okay, so the financial literacy will play a role, and I think there is now a need for having some sort of certification for these apps, that unless
Mm-hmm.
these are certified by a third party, folks should not be using those financial apps.
Mm-hmm. Right, right. Thank you so much. So we have a hand raise from Jeet. Jeet, please go ahead and ask your question. Yeah, hello. Jeet, can you hear me?
Puneet, you're on mute.
Yeah, so Jeet, if you can unmute yourself and ask your question.
Hello, am I audible?
Yeah.
Yeah, Jeet.
Ye-
Hi,
Yeah,
Jeet.
yeah. So what is the risk when we do not use AA? So, like, what sort of problems can we face if we do not use AA?
See, to start with, it is the convenience. See, now, okay, you want to go and apply, for say for a loan, education loan or home loan or anything like that, right? Now, you tell me, do you want to share the information using an app, or do you want to go to each of the banks, get the hard copy of your statement, pay 100 rupees, have it endorsed, and actually give?
App.
Okay.
Good.
Next, with account aggregator framework, every time a FIU will access your data, you will be informed about it. And when you give the hard copy of the information to any institution, it will be on the desk. Anybody can read. All those things may happen. So obviously, AA is the way to go. I mean, okay, now, I mean, at least for me, instead of me actually carrying cash, any shop I go, I would want to use my UPI apps. Any day it's more convenient, and especially after the your COVID time, you would agree it is also healthier, right? The same kind of thing you will see in the account aggregator.
Right, sir. So as you, I understood that part. So as you also told that account aggregator will be providing relevant information to the lender as well as borrower. So sir, what do you mean by that?
No, what is the relevant information to the borrower? I didn't understand that.
As like if I'm applying for a loan and I am doing some um, what we
No, no. See, when you apply for a loan, the lender will ask for your financial data. The borrower is allowed to choose which of the bank accounts, which from which he wants to share. So the end user is in full control.
right.
I'm not sure if you got the answer or.
Yeah. So thank you, Jeet, for the question. We have Meet Kothari next. Meet, you can unmute and ask your question.
Yes, sir. In addition to what you just said, while we give the data owners, the potential borrowers, the option to select the accounts from which they want to share the data. But
Correct.
so won't that hinder the lending borrowing process? What if the bank actually to assess the complete credit capacity of the customer would want to check for all the loan accounts, right?
Yes.
But then how exactly would that
How is it
particular
happening now? Now, how is it currently happening in the your non-digital world? It's exactly the same, right? Because you are sharing with the lender only those bank accounts with which you are comfortable. Same thing is happening here, but you should also know, I mean, rather, you also know that the lender is having access to your credit report. So
yes,
if something was wrong with any of your bank accounts, those signals will be seen in your credit report. Then the lender can tell, looks like you have one more bank account. We also want information of that bank account.
okay, okay. That's I think I understood. Thank you.
Yeah. I see Kiran raising his hand. Kiran Sutar.
I think it's Jeet. Uh, yeah, Kiran, do you have a question?
No sir, no ma'am, मैंने hand raise नहीं किया है.
Acha,
Okay, okay. No, no worries. Yeah.
Yes, sir. I just want my question was same as Meet Kotari. I understood it right now.
okay.
Thank you so much.
Okay, great. So we have one question on the future of how AA is expecting to expand. So keeping the current sectors aside, what are the sectors that AA is looking to expand into next? And how will it directly aid in financial inclusion
Yeah,
plan?
sure. See, now it has expanded through GST. Okay, we hope to expand to the income tax, DigiLocker, your provident fund, your mobile. I mean, okay, telco data. Okay, the financial inclusion actually comes in many ways. Okay, one is you assume that you do have a bank account. You are a small time trader, etc., and the amount of money you want is way too small, as I gave the example. In the
Mhm.
offline world, it won't work out, for the bank, because you have to sign this that and all that. So the money they make is not enough, so they don't offer the small ticket loans. With AA now, it becomes easier for the lenders to give a small ticket loan. So obviously it
Mhm.
is increasing the financial inclusion. Now, if somebody wants to process your telco thing, right, bill, because your phone actually phone bill gives a lot of information. The
Mhm.
your the frequency and the your promptness with which you actually you pay your bill, you recharge, etc., etc. So, and about the geolocation of from where you make calls, all that can help the folks to get loan of 1,000, 2,000, 3,000. Okay, so
Mhm.
in lieu of that, we say AA will help MSMEs and the lower strata who have the cash. Okay, but it is not the footprint they have is not as large as any lender would have been interested. With AA, it will change.
Right, right. Oh, thank you so much. So we're done with our question bank. If anyone has any question, you can unmute yourself and ask. Does anyone have a question? So I guess not.
Okay.
Puneet has a question. Yeah, Puneet, please go ahead.
So just another question, and this you may have just answered it earlier, but so becoming an AA, does that need to be legally? You need to have some legal approvals from RBI or anybody, or are there some specific institutes which can actually get a license to become an AA, or does that also open doors for new entrants into the market who are very tech savvy and can get
So
into?
doors aren't closed. If anybody is interested to even apply now for A, they can apply with the RBI. From what I've been informed, that there is no application fee also for anybody to apply for an A license.
And it does not even require any kind of a bank guarantee like the NBFCs or ARCs.
You require the net worth of the company. It can be in any form, which they will be about 2 crores.
2 crores.
Yeah.
The net worth of the company. Now that could
Yeah.
be anything.
It can be your, I mean, like, I'm not telling that, but it can be the house, this, that, and all. Anything.
Sure. All right. And usually, how much time does it take for a person to, get this license cleared from the?
You have the 2 steps. So one is to get the in principle license, right? So I heard it will take approximately 6 months, is what I've been told. So see, all this information is what we hear. It is not we who give. It's the RBI.
Surely, sir. Sure.
Okay. And the operating thing, I mean, I don't know. Like, if you have applied and they're waiting for about a year, so it should be coming for them anytime.
Sure, sir. Thank you, sir.
Okay, thank you. So if we don't have any more questions, then we can close the session. Thank you so much, Mahesh sir. A very interesting and informative session indeed. Thank you, and we look forward to having many more sessions with you in the
Sure,
future
my
also.
pleasure. Yeah.
Thank you, and thank you everyone for attending the session. We'll see you all tomorrow for our next session. Thank you, sir. Thank you, everyone.